Hey folks, David Frost, mystrategicforecast.com. You're looking at a chart of Mastercard, and the reason it's on the screen is because I want to discuss and review a trade alert that went out to members on Friday that's been a successful trade thus far, and it's a guaranteed winner. And let me go over what's the anatomy of the trade. So a trade alert goes out on Friday by Mastercard at $73 or better. So I happened to get it at $72.80. Some members got it less than that. It went down as low as $72.45, and then it finished the day up, and then it was up slightly yesterday, and then today it was up almost 3% on the day today, so it was a little over $2. And we took half the trade off the table earlier in the day at $75.25. So on our half trade, we've made 3.2% in basically 2.5 trading sessions, not even. And then we have the remaining half position still in the stock, and we've put a stop in the money, okay, which means that there's no possible way on earth we can lose money in this trade. We're guaranteed to make money. It's just a matter of how much. So we have another target on the stock, and I'm not going to tell you the target, and I'm not going to suggest you buy Mastercard here. The trade is half over. You know, when the train leaves the station, let it go and catch the next one. There's a trade again. You know, there's always a trade another day. So, but I just want to review this for the benefit of everybody to see the thought process and where this trade came from. So here you had Mastercard had a pretty good sell-off, about 10% from peak to trough, okay, down here, and maybe slightly more than that. And no, about 10. And so what happened was you had this pivot low here, okay? It was coming into this pivot low, and I thought that that was going to be a good area of support. You had a low, a higher low, a higher low, and I thought that this higher low would hold. But that's not the only reason. That's not nearly enough to take the trade. Let me show you something else. Let's go to a Fibonacci retracement. Okay, and then I come over here and I see where are we in terms of a retracement rally in this stock from the low to high. You know, where have we gone? So we came into the 50% retracement, and the 61.8% retracement is basically close by. So I figured in this area here was going to be a good bet for three reasons. Okay, number one is we were oversold here, and I thought that this pivot low would hold. Okay, not a good enough reason to take the trade, but certainly one reason of a few. The second reason is this Fibonacci retracement, okay, into the 50 and 61.8 retracement from low to high and back down. We're retracing that move from low to high, okay? So that's number two. That looked good. And then the third reason is, and I've been saying this in the other videos, which is don't expect any significant downside in the 4th of July week leading up to a long 3-day holiday weekend on the 4th of July. So I know that there's no guarantees essentially, but the market has a tendency to float higher into these light volume holiday weeks. So float higher. We're not near the turn date on the bigger turn I'm expecting. So I still think that we were looking at, and we got closer today, S&P 2000, okay, Dow 17,000, we're basically right there, and I've been saying we're going to 2,000 on the S&P, and today was a move there, and I obviously didn't know this was going to happen today, but nevertheless, all these are the reasons why this trade in particular looked good, and there's others out there, and I may issue another one tomorrow, but this one, those three items were enough for me to take this trade, and we took it. And what happened is the members got rewarded because we made money on the first half. We took it off the table, got a stop in the money on the second half. No way we could lose money. It's a winning trade. It's just a matter of how much. Doesn't seem like a lot. 3.2% on half the position. And if the second half goes to target, it'll be much more than that. But it doesn't seem like a lot. But if you think about it, it is a lot. You know why? Because we do it over and over and over and over again. And when you do this 5, 6, 7, 8 times a month, okay, with 80% or 75% winners, okay, and you're managing the downside on the losers, you're managing risk very tightly, okay, guess what? it's a recipe for a lot of money. And this is what happened. So I wanted to show you the trade. I wanted to give you some of the reasons why I took the trade and just let everybody see, a real life anatomy of a trade example. So this is David Frost, mystrategicforecast.com. Thanks for tuning in.